everybody, and welcome to Tribal Trades. We're up to part 3 of the money printing method, part of our life-changing gains series. If you haven't checked that out, check out lessons 1, 2, 3, 4, and 5. Technically, this is lesson 6 that we've broken up into 3 parts, part 1, 2, and 3. As always, if you haven't done so already, if you could smash the like, subscribe if you'd love to join our ever-growing community, hit the bell notification. You'll be notified when part 4 goes live. There will be a part 5. We've really broken this down in detail for you to make sure we have an efficient description and detail in there to help you learn this method. And of course, any questions, I love the questions and the comments, so keep them coming, and I look to reply to all of those in there. And in the description, make sure you check out TradingView and Lux Algo. We're going to jump straight into the charts. I'm going to take my head off the screen so we can see all of this. So in the last episode, we learned what indicators you needed to use. In this lesson, we're going to show you how to trade this. So just quickly recapping, it's a fast, medium, and slow EMAs. It starts at 2 EMA and goes all the way up to the EMA 100. It's a free indicator on TradingView that an amazing trader has created and made available for free on TradingView. And what I've done is I've taken that indicator and added another 5 indicators with it to create the money printing method. But it is this specific indicator, the ribbon, that really makes the magic work, okay? And it moves with price, as you can see. It moves with price, and as price moves away from it, it just keeps getting drawn back into it, okay? And so unlike static support and resistance, this is dynamic and moving. This ribbon is moving. So basically how it works, and here we get into the magic here, when it's green, it's bullish. When it's red, it's bearish. And the idea is to get the entry when as close as possible when the bands change color. Okay, and then once they've changed color and they're green, then you continue to get new entries all the way up or all the way down if it's red. Okay, and so what you'll see here is you'll see 2 of these EMAs are a thicker yellow color. Okay, we've got this one here and we got this one up here. Now this orange one is the 200 EMA. Okay, and that will come in at some point. I'll show you. But it's this one and this one. These are the 2 that you need to pay attention to, okay? And the idea is that you want to, so let's close this price action up a little bit. So the idea here is we've gone red. So when would you get in the trade? You get in the trade as soon as it goes green, okay? As soon as it goes green. Let's just pull that in a little bit so we can see that a little bit more clearly. So as soon as that goes from red to green, we would get in the trade. Again, over here, we've gone to red and to green, get in the trade, gone from red into green. Now, there is a no trade zone, and that's when it's kind of flat. So when it's kind of flat like this, that would generally be considered a no trade zone. Although, technically, as you move from red to green, you could have traded this, taken profit, and come back, and technically the same over here and to the downside. But it's kind of like pretty choppy here, and you could end up getting stop lossed out a whole bunch. So that is generally the no trade zone you want to trade when it's slanting green to the upside or red to the downside, okay? And so we want to make sure that we trade the 2 yellow EMAs as your retest area, okay? So let's see how this would work and how I successfully traded this over a couple of days, and it turned out to be quite good. You can see I've added the volume profile indicator, which I showed you from the last video. So I do find that to be fairly useful there. You can see when there is a lot of volume there, and that can often, you can see there was some support there. There's the 200 EMA, there's the ribbon band there, and there's the volume support there. So that gives confluence and confidence in getting into the trade. Okay, so let's just say we traded this price action here and it went from red. We would have gotten in the trade. We ride it up. When do we get out of the trade? That's a great question. Now, in theory, you can actually, I showed you how to set up the Fibonacci's. You could wait for it to get up to the Fibonacci here at $1.07 at 5 and have a second take profit at the 618 at $1.10. And then up here, you could take, you could take profits on the Fibonacci's, or you could look at the volume profile and say, hey, we're going to take profit here, or you can use the Lux Algo and say, as soon as we get into the red, I'm going to take profit. I'm going to show you how I trade this system, and then you can kind of decide how you want to trade it. I trade it. I'm quite interactive with it. I'm quite engaged with it. I'm quite involved with it. I like trading in and out as many times as possible. Okay, so here's how I traded this. So I got in here, got out because we were up into the red take profit area, and we were around a Fibonacci at around $1.05. And at the time, we were close to the 50 and the 200. We'd broken above the 50 and the 200 EMA, which I thought was quite bullish. Or we'd broken above the 200 AMA. We hadn't broken above the 50 days all the way up there. So come back, and when it hits this yellow band here, that's when you re-enter. And you re-enter and you go, what about stop losses? Guess what? That's coming up in part 4. I'm going to show you where you put your stop losses. But guess what? I wasn't stopped out here. And maybe some of you can guess it before part 4. And then I wait. We get up into the red again. I take profit, okay? And sometimes there's a Lux Algo order block. We'll when we get to a little bit more current price action, the Lux Algo order blocks aren't going to show in the past. They only show in the present. And so I'm just showing you how I traded this price action. Then it comes back, retest, get in, take profit, get out. Get in, take profit, get out. Go down to here, stopped out here, okay? Wait, get back in when it goes to green. Probably hasn't taken profit here. Comes back, not stopped out here. Now take profit. We're just coming up and hitting the red. And it also gives you a little X. Lux Algo comes a little and gives you a little X, which is a little take profit sign. So I do generally obey those little X's there. Now we come down, stopped out. Okay, so we took profit, got in a new trade because it hit the top. And it doesn't matter which yellow band. This yellow band could cross above the other one. Whatever the top yellow band is, that's what you trade. Then it goes up here, stopped out. And then if you wanted to go short, you would do it the opposite. You come down here and you get in on the yellow band here. You get the X here. So you take profit here. Then you would get back in the trade as it touches the first yellow line, but then you're going to get stopped out. So I'm not as keen doing it in a bull market because you can get stopped out, as you can see too frequently. You get one trade and stopped out, one trade and you get stopped out. We're here now. Look at this beauty of a trade here. So on this one now, we're above the 200 EMA trade. When it turns green. Now we turn green. We already just got stopped out, but now we can take a long. We can switch from our just got stopped out from our long, and we can get back whatever small amount we lost very quickly on this little green upside. Take profit, get back in the trade. 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 Don't get stopped out. Take profit, and you can see all the way up, in, out, in, out, in, out. We get all the way up there. We do have a situation here, by the way. This is interesting. I'll show you this, where took profit, got back in the trade, took profit, didn't get back in the trade because we did not hit this top yellow line, okay? Now, actually, here's the thing. The X's don't always show. So you could actually hold this trade, and unless Bitcoin doesn't kind of crap itself and dump and take the rest of the market with it, you can hold up and take profit here. The other way you can do it is when these green EMAs or red to the downside, they stretch out. So you see these top 3 EMAs become quite disconnected from the rest of the EMAs. And you can see there's confluence because they are stretched out and we get the X. They're not as stretched out here, and they're not as stretched out here. They're not as stretched out here, and they're not as stretched out here. But here they get stretched out. So in theory, although I did do this because this was a $1.08 up to about $1.10, and you can make some fairly significant profit there, okay? So, and you think, well, how can I make $300 a day? Well, if you are a 3-cent swing and you spend $300, $3,000, let's just base it on $3,000 because I think that's achievable. to get $3,000, even if you have a garage sale to get some of that money together. But $3,000, maybe you have 1,000 and you use leverage, or you use 3,000 spot, and you have $3,000. Well, if you'd bought it at $1.03, $3,000, then you're going to have about 2,912 SUI. And if you make just 3 cents profit, then you've made actually $90 just there on a 3 cent swing. So with $1,000 trading leverage or $3,000 trading spot, you just made on a 3 cent swing $80. And you might say, well, $80? Well, actually $90, around $90. $90 times 365 days is $32,000 for the year. But if you do that 3 times in one day, that's about $300. And you times that by 365, and you've got $110,000. And look how many times we were able to do this here. This was from June 4th in the evening at 7 o'clock up to June 6th, kind of lunchtime, before we kind of lost the trade around here. Actually, so 2-day period, there were 1, 2, 3, 4. I mean, there was about 12 trades in there, all just a few cent moves. And only one of them was stopped out way back here, which we were showing you. So let's move along in the price action and see what we can learn from here. So you can see here again, stopped out here on this one, back in the trade, not stopped out, still in the trade, take profit, get back in. Look at this one move, and you wouldn't take profit until it hit here. So that's a full 4 cent swing, 4 or 5 cent swing. Well, that's almost getting close to a $200 trade just in that one swing up. And then you take profit. There's an X there, but also the bands have spread out. So that's what you have to look at. You look at the bands spreading out. Now, that, of course, if you're not using Lux Algo, because you don't have to use Lux Algo. Lux Algo is paid, but you can use this as a free indicator. So on the paid indicator, you're going to get this red cell for going long or buying spot and price going up, and you're going to get this green cell if you go short, and that's only with leverage. You also get these little X take profits here that signal, and sometimes price will keep going, by the way. It's not perfect, but as you can see, it's pretty accurate. You can see it gave the X there and then it went up probably another cent there, okay? So that's with Lux Algo, and you have the order blocks, which I'll show you in a minute. So the main take profit, if you didn't use Lux Algo, the main take profit signal is going to be this here. You can see those bands stretching out. Let's keep moving along as we see a nice big dump. You see here, it doesn't as much. You don't necessarily have to take profit, but then here, that's as we get up high, and so you can start doing that. Now, obviously down here, we got stopped out. We got back in the trade, made some profit, really got stopped out. And this is where you want to make sure that you are protecting the trade. And therefore, you can go, as soon as it goes to red, you can go short, and boom, look at that move. That's a move of about 15 cents down there. So in that one move, in that one wick, in that one 15-minute time, if you went 15 cents, what was it? We had about 2,900 SUI times about 15 cents. That's a whopping $435 just in that 15-minute candle. But then watch this right up, because you would get back in the trade, not here, not here, here, where we go green here. Okay, well, technically you could, but the candles are still a bit red, darky, and we're still under the 50-day moving average, and we're under the 200 EMA, and that's how I use those as well. And then when we break through there, we go green. Then you can take a trade, take profit, get back into the trade, and you're going to get stopped out again down here. And then we start to go into a bit of a sideways where it may not be the best time to be trading this coin, because all of a sudden it's kind of looking a little bit bearish. Oops, I just moved by accident. All right, let's move to the current price action. You can see now it's best to be shorting this coin. So now we've gone quite a little bit bearish here, short term anyway, and you can now see the Lux order blocks are in there. So let's pretend now that we're trading the short. So this is quite good because this is a coin that was quite bullish, and now we're going quite short on this. So let's see how this all works out. So what we've got here is we went short, and of course, if this is only if you're using leverage, we were able to take profit, get back in the trade. We got stopped out, go short again. We're going to get stopped out. So this is where this sideways choppy action, it's not really going down. You kind of stay out of this. This is where you go, where it goes slanted to the downside. So you see with green how it was slanted to the upside. Then we had a bit of a V-shaped recovery, and then it was sideways chop where the bands are really close. You tend to try and stay. You can still trade it. You can still make money. There, charts are being a little bit weird there. Let's move those across. And now you can see how this could be traded. Okay, now we have a bit of a coming down here, red. So it comes into here, order block, it rejects, hits another order block, rejects, and now we have some price action to the downside where you can actually see here, you can all the way from here, you would get in the trade, probably here. Yeah, you're probably going to get stopped out of your long if you went there, but you would get in the trade as it goes somewhere around here. As it crosses that top yellow EMA, you'd get in the trade here at $1.09, and then you wouldn't have taken profit until $1.07, a good 2 cents profit there. You could have taken more profit at all the way down at $1.04. You could have ignored this one, or you can set up multiple take profit zones. You don't have to get out of the trade straight away. You can take some of the profit here, more of the profit there. You know now you're kind of into the green here. And you also know that the bands are kind of getting quite stretched out away from each other, like it did to the green to the upside. You can kind of see that to the red to the downside. Okay, so now we see as you come back to it, you wouldn't have got stopped out here. So you would have got back in the trade. You would have taken profit, got back in the trade, not stopped out here, and then you would just you would still be in this trade, really. You would just ride it, take profit here, take profit there, and now we're going a little bit deeper, a little bit of a good buying opportunity for SUI here right now. Okay, so there you can see. So how do the order blocks work? Well, look at sometimes with these order blocks, they can be good profit zones. Okay, so what do we see here where this order block is here on SUI? You can see this ended up being quite a good place to take profit. There wasn't any Fibonacci's there. You weren't up in the red zone yet, but we hit an order block. So that is where I took profit right there on this there. I traded the swing, took profit there. I didn't trade the short. I would have been stopped out on that one, and then I would have got back in the trade here. I got back in here, and then I took profit because these were stretched out and I hit an order block. So you can see how that works. You can also see too that this sometimes can be resistance. It took a little bit of a go to get through here, and you can see here when it came down, it shot below it, it back tested it, and then came back down again. And now we can see we're solidly under the 200 EMA, and we're also under the 50-day moving average. And you can also see here when this comes down, there's the 50-day moving average there. Conveniently, it found support off that. So that's why I like using the 200 EMA. They provide additional levels of support and resistance. I like using the Lux Algo because they provide additional levels of support and resistance. You've got the bands, which show you where to take profit. You've got the yellow bands, which show you where to get entry, either to the top or to down below. You've got the volume profile indicator, which sometimes matches up with these Lux Algo areas here. So that can be really helpful as well. Okay. And then you've got your the trading zone that you trade in. We've set up based off the Fibonacci's as well that we set up. You've got the upper band and the lower band. And you can see we've kind of broken down, and we're coming down to maybe test the bottom of the range there. And so you can see we lost the middle range, and it's good. You know, when you come down, there's confluence there too, because then you can see, hey, if we might find support there. We did. we might find support there. We did. We found support here. We found it again here. We found it again here. And then a fourth time it broke through. Now that is resistance. And now we've gone down. So this is why we use the Fibonacci's. And this is why we draw these trend lines here on the 0 and the 5 and up at the 1. And the 618 can sometimes be a good area of resistance. You can see how it's kind of come into the 618 around here. All right, so that is it. That is the trading strategy. I'm going to show you how to use stop losses in the next episode. So if you thought that I forgot about stop losses, I have not forgotten about stop losses. I'm going to show you in the very next video, part 4, where and how to add your stop losses so you can protect your trade and you can protect your capital. So until we see you in part 4, happy trading.